There we go. Bam. We are live. Welcome to Thursday Night Stock Charts Live. Yes, I know you can't believe it. Another day, and what a day it was. We're going to talk about pretty much how bad our day was. I mean, our longs did very, very well. They did very, very well, but we're going to tell you a story about a trade that early on anyway, it only being one day into it, uh, is not going well. So let's talk about what we're going to talk about. We're going to talk about the trade, the Qs. We shorted them today pretty aggressively. We'll tell you the why about why we did it, what the game plan was, and what we expected to get out of the trade. We'll talk about where I think we're going next on the Qs, and we'll talk about the Federal Reserve's balance sheet. Did they increase their balance sheet? Did they decrease their balance sheet last week? That's all released now. We're going to talk about the valuation of the market, and then we're going to talk about the weekly price action of all the major averages and subsectors. How do they look? How do we appear poised to close out the week? So, as we always do, let's go to comments. Let's say hi to folks. Hopefully my audio is working. It has been a nightmare of a day with this software. TZ Burton, welcome. Welcome. All right. Small crowd tonight. So let's get to it. Okay, let's talk about the Q trade. Now, Jerry, yes, this is a perfect example of what we're going to be doing. You know, folks, before you get into the Q trade, reminder, we're launching the Contrarian Trader Public Forum on August the 30th. If you want me to go over symbols, just enter them in the forum. That's what it's going to be meant for, along with a lot of other stuff, stock chart requests for live stream, small account club, premium content replay, trade idea feedback, develop long-term relationships with traders of like mind, discounts to our preferred vendors such as TrendSpider, which we're going to be going over and using in a moment. So, Jerry, if you please sign up. It's free. You'll be housing your requests in the members area. You're never going to be asked for a credit card. So we want to keep it very, very organized because this stream can get very, very busy, and I miss stuff. So I don't want to miss anybody's request. So we're not live tonight with the forum, so we will go over SMH. Okay, let's talk about the triple Qs. What we're doing is we're looking at the weekly chart. Now, remember, the trip Qs were up about 2.5% today. So a pretty sizable measure of this week's gains came today. In fact, half of those gains came today. So we were down around here, just above this weekly breakout point on TrendSpider. So all you do is just click a button, automated technical analysis. And so I said to myself, what do we do here? Do we want to make a bet that the Qs are unable to close above weekly resistance and short into it? That's a one game plan, but it's kind of risky. The other is that we could take a look on this weekly chart, overlay monthly resistance levels, and see what we have above. And that's exactly what we did. And here you have it in dash line in purple. We were well below that this morning. And I shorted into that resistance level, and it just kept going. No two-sided action today. None. None. So here's the intraday view of this morning's price action. Ripped it up higher. We shorted into resistance. Here's the monthly resistance level. And it just kept grinding up higher. Now, at this point, you can see that we pulled back off the highs a little bit. But at this point, what we need to go back to is this and say, okay, I didn't mean to do that. Let's go back to the weekly chart and say, okay, do we have any other resistance levels where we might have sellers of like mind willing to step in and help us with our trade, meaning push the shares of the Qs down? Yeah, up here at the next monthly resistance level at 479. So I'm not loving that, to be honest with you. Not loving it at all. All I wanted to do was get in and get out on a rejection at monthly resistance, and it could still happen. You know, we may close down below this weekly support level. It's not likely, but when you take a look at a daily chart of the triple Qs, all we've done since last Monday is consolidate for a few days, and then we did this straight shot up higher. Ascending wedge formation. We blew through it like a hot knife through butter, the upper band. I still think that we need a higher low here. A broken record on this. I've been saying it for a week now. And the Qs have proved elusive. So we'll see how we open up tomorrow. I'm not liking the trade right now, but we're not always perfect. But we did have a rationale of as to why we got into the trade. We had a logic of how long we wanted to stay. It wasn't a bet, going back to that daily chart. It wasn't a bet that we were going to break down below the lows of last Monday. It was just simply that we were looking for a pullback, a higher low, support level retested, and then we would just book profits and exit stage right and get low in the market in all probability. So that's the risk of trading, right? This is what we do. So as it stands right now, might we pull back tomorrow on the Qs? Sure we can. But we also may move up higher, so we may need to lighten up on our position. Moving on to the economic data that came out this week, a pretty good mix. I mean, you know, not all of it was golden. You had the NFIB Small Business Optimism Index. That came in with a healthy beat. That helped the small caps. Producer Price Index, that's what everybody hung their hat on to get this rally going. The problem is that the CPI and the PPI caused a problem for not the probability of a rate cut, but the probability of just how much of a rate cut we're going to get. Now, this has been UNCH all week. 100% probability of a cut. They are going. But here we are right now, 5.25 to 5.5 basis points on Fed funds rate. So they're only expecting probably around a quarter basis point cut at the September meeting, where they were pricing in over 50% probability of a 50 basis point cut 2 days ago. So the way to look at that is say, okay, you know what? How do we rationalize this? Why would the market rally on that? Well, you can rationalize it. Well, the economy may not be as bad as the non-farm payrolls and the initial jobless claims implied 2 weeks ago, 3 weeks ago. And you're seeing inflation come in a bit, but I have some reasons to doubt that inflation should be coming in, the CPI should be coming in, and we'll go over that in a moment. Housing costs being a major sticky factor. But there are other factors out there that make you question, how could the CPI come in so much, yet prices are still going up in many areas? So, the BLS, who puts out the CPI report, well, they're also the ones that put out the not the CPI report, the non-farm payrolls, and we know those are garbage numbers. They also put out insurance rate data, and we're going to talk about that car insurance rate, health insurance rates, and we'll talk about how kind of messed up the CPI is when it comes down to, in particular, health insurance rates. So, going back to the economic data, one thing that the market's kind of overlooked on PPI is that PPI came in hotter at the core. The headline number came out lower than expected. Core CPI year over year flashed a two handle for the first time in a very long time. At the core, came in as expected. Year over year, we're still nowhere near a 2% handle. Today, initial jobless claims came out a little bit less worse than what was expected 2 weeks in a row. Empire State Manufacturing Survey, less worse. Philly Fed Manufacturing Survey, less worse. Both of these were expected to have negative numbers, and they gave us negative numbers, but just not as bad. Retail sales blew the doors off of what was expected. The question is, what drove this? Rebound after cyber attack. So does that last? We'll know next month. A lot of data came out today. A lot of data. Industrial production, horrible number here. Horrible read. U.S. industrial output fell for the first time in 4 months in July. The markets didn't care. The market simply did not care. Home builder confidence missed. Tomorrow, consumer sentiment, 10 a.m. report. So might that give us a sell the news? It's quite possible. Now, going back to the CPI report, auto insurance rates have spiked 50% over the past 3 years. Think about that. Think about that. That's the biggest 3-year spike since 1975 to 1978. But this one, take care, Sean. Catch you later. This one here, the most absurd number in CPI. According to the U.S. government, the cost of health insurance has declined 30% over the past 2 years. Again, going back to the BLS, they put this together. And it fell 8% over the last 5 years. I know my health insurance hasn't gone down. It's gone up. So I'm not exactly sure how they're pulling these numbers, but this is just more skewing of the CPI report. I think they no longer factor in coffee prices, which we know are going up. They've manipulated this number on the CPI to be like homogenized milk. I mean, really, what's left to it anymore? So Sven Henrik put this out. So if we're going to believe that the CPI is accurate, then the Federal Reserve is way behind the curve. His argument here is that Volcker should have already cut. What you're looking at here is CPI in blue, Consumer Price Index, which has been dropping, and the Fed funds effective rate, which we just went over. Or did we? No, we didn't. Here. Actually, no, I'm sorry. That's the wrong chart. We're going to be going over that in a minute. This is the Fed's balance sheet. Normally, the Fed funds rate should be below the rate of inflation. It is not. It is at current measurably higher than inflation, if you're going to believe the numbers. So if they're only going to go a quarter basis point, that may be a little bit too late for the markets. But as it stands right now, I got to tell you, the markets are looking pretty healthy. And one of the main charts that I watch is the yield curve. It's currently down on the week, but one trading day left to go. Now, the Fed's balance sheet actually ticked up last week. Let's call it flatlined, right? It was a very slight tick up. So it looks as though over the past month or so, the Federal Reserve has really stopped rolling off debt off their balance sheet. And that is bullish for equities. But when you take a look at the Shiller PE ratio on the equity prices, we're at 35.75, nearly 36 on the Shiller. I mean, we're more expensive now than when we were prior to the sell-off a few days ago. So, you know, there are reasons to be bullish here, but there are reasons to be somewhat skeptical of the rally just doing a straight shot up higher like this. Larry, let's watch USO, Middle East situation. Yeah, I was going to talk about that, and I backed off of it. Disruption in oil supply could push crude to 120. Yeah, they're really massing a lot of equipment over there. I really worry about that. And I'm worried about the fact that you now have Western tanks. Think about this. Western tanks in Russia proper, within their boundaries. What do you think about a 2.5 plus target for natural gas into the fall? We could take a look at it. Nat gas had a good day today, I believe, unless they reverse. It's so volatile. Okay. We'll take a look at, we'll take a look at the chart of the UNG, and we'll take a look at seasonality on natural gas. Now, as for the NASDAQ, it barely held on to its 50-day moving average. To be fair, it held its 50-day moving average for the first time since July the 31st. But think about it. You know, I come from a school where higher lows are a good pullbacks are a good thing, just like back here. Again, triple Qs. What was wrong with this setup? We fell, we rallied, higher low here, and then we got a breakout right up higher. This concerns me. We don't have great volume. We have just gone straight up. So is that indicative of a short covering rally? Could be. It also concerns me that you have Stanley Druckenmiller, and this is not just Stanley Druckenmiller, who happens to be a great investor. Soros just dumped all of his NVIDIA stock. Warren Buffett sitting on a huge cash hoard. And with respect to Stan Druckenmiller, consumer discretionary names, he changed his portfolio. He reduced his portfolio to those names by 51%. Infotech reduced his portfolio by nearly 64%. Real estate, this is surprising to me. Real estate down 68%. Materials, 16%. Infotech and the Flex product, there's two products he's got here. Actually, three. Actually, he's got like 5 or 6 individual stocks and funds. This Flex fund, he's reduced it by 62.49%. Palo Alto Networks by about 36%. NVIDIA, he also dumped some NVIDIA. He reduced his portfolio size by nearly 88%. And more industrials down in that position 61%. So what did he put money into? He put money into areas that do well when you have a market that is somewhat suspect, or when you're in an environment where yields are going lower and you have a flight to chase yield. So where might that be? Well, right here, utilities. He increased his position in that area. To be fair, utilities and telecom. So that's probably a Verizon, a dividend-paying name. So less risky, more cash flow generation names. He increased his position there by 74%. Consumer staples, another area where you want to go as a safe haven play. Well, you're going to go to consumer staples. That's a new position. So in essence, that's a 100% increase from where he was. He added to real estate. I don't know the difference in real estate funds. He decreased in one area, added to another. Obviously, this is a different mix of real estate, so I can't speak to it. More consumer staples. Philip Morris, he added to, individual name. So clearly, Druckenmiller is getting somewhat conservative. And this is offered from Jesse Felder. Stan Druckenmiller trims holdings in Mag 7 names. Yeah. So TrendSpider posted this out. And we've seen this before. And, this is a valid chart. And not for the usual reasons. Usually you don't have a bear here. The usual expectation is that you get a sell-off, rally, and a breakdown. I don't know about that. I think this is accurate. I think that this is bears quite possibly hoping for a sell-off or major sell-off, meaning not just a trade for a pullback like I'm expecting, but a nasty, severe sell-off. It could be. But as it stands right now, we're seeing the yield curve, which came close to uninverting last week, that has now come back a bit. And I watched that like a hawk. So if that's starting to pull back, then all of a sudden I start thinking, all right, maybe I should be long in this market a little bit here, a little bit more than what I already am. So I think this is fair, that while sure, this is all good, enthusiasm, greed, delusion. Yeah, that's all what you expect. You sell off. All right, we're going to go back to normal. We're going to take out new highs. Yeah, we could be there for all we know. But are the stars in alignment? Not yet. The only thing I could say is that we could use history. And history says this. Usually at the time of the first rate cut, that's usually a top in the market. And that first rate cut's coming up soon, real soon. I mean, this month is almost over, if you can believe it. So I would be very, very careful about being aggressively short this market right here, right now. If we pull back and put in a higher low, let's do a hypothetical. Let's go to a weekly chart. This is the trip Qs. And let's say this. Let's take the monthly support levels off. And let's say we do this. Next week, we get a quick snapback rally to retest this support level here at around 465. Okay? That's around let's call it a 2.5% pullback. Yeah, that's about right. 2.5% pullback. If we follow through, meaning if we take out after doing a retest of this weekly breakout point, we reverse off of it and we take out this week's highs, you better cover shorts because we're going to go up a lot higher. We're going to at least retest this level up here where we failed back in mid-July. So in terms of seasonality, what's the probability of that happening? Might we get a pullback? Absolutely. Because the seasonality for August is not great. We're only up 58% of the time. And it gets worse for September. And in terms of a weekly potential for a pullback, it's there. You can't ignore it. But once we get through to November, it's going to be after the election, unless if Camilla gets elected, I could see that being a problem for the market, because what she's talking about now. I think she finally put out her platform. She had no platform, none. So whoever tells her what she stands for, they've already put it out there to a certain extent, and they're talking about price controls, and that's like full-blown communism. When you get price controls, it does the exact opposite of what's intended. These politicians, it's not that they don't look at history, they just don't care. It's just what looks good for the headline. And price controls, what happens is that, okay, you come to me and you say, you're producing corn. You can't charge more than X for your corn. And we're going to give a savings to the consumer. Okay, guess what? I'm going to stop planting corn. What does that mean? It means shortages. It means shortages. People don't have corn to eat. So what does that mean? It means that people are going to have to pay up for any corn that's out there. Creates a black market. So it's the most stupidest thing. Rather than setting free the free market, what she's going to do is try to apply caps to the free market. Never works. Never, ever, ever, ever. Stupid. But it's a good headline, and that's all I care about. It's all virtue signaling. Let's go to comments. TZ Burden. Buffett has more cash than the U.S. government. That's a fact. Druckenmiller picked up TerraWolf. I think we went over that chart a couple of weeks ago, no? TerraWolf? Problem in this twisted market is that the Fed is a buyer of the whole resort, and the market will go higher until selection. AI computers require massive amounts of energy. Where is that coming from? It's a valid point. I mean, the utility rates over in Maryland have skyrocketed like 50%, but the CPI is coming down. You have energy prices which are going through the roof in Maryland because of all these data centers they're putting up there. Yet prices are coming down. Okay. Which do you like best, T or Verizon chart? Different animals. I think VZ is more of a dividend play. We'll take a look at them. We'll take a look. Hey, Pete, welcome. Okay, just a reminder, folks, we're going live August the 30th with our free trading forum, link below. As a matter of fact, if you're doing this on mobile, I have for you. What do I have for you? I have a QR code you could scan with your phone. Hot stuff. Scan that code over there. It'll bring you over to this page. Enter your email address and your first name only. No credit cards, no nothing like that. And join us. And when you do join us, when we do these live streams, as a matter of fact, the Labor Day live stream is going to be done inside of the public forum. So there will be a replay, but if you want me to go over any charts, they'll be posted in the free public forum. So again, link below on YouTube, link above on Twitter, and if you're watching us on Instagram, which now we're posting to, Instagram, we're streaming to, just scan that barcode there, and it'll take you on over. All right, let's get back to our regularly scheduled programming. All right, let's do the weekly charts. All right, so this is the yield curve. And I mentioned this earlier that the yield curve has pulled back measurably. 7 bips, pretty good move for the yield curve. I look at this in a different way. Okay, so the fact that we're it's so messed up. The fact that we are rallying the stock market on a yield curve which is pulling back, which is indicative of recessionary conditions in the economy, is mind-blowing. So, you think about it for a moment. What we do here is kind of sick and perverse. I'm looking for this to uninvert because I know that when it uninverts, equities are going to go wild to the downside, just like they did last week. What happened last week? Monthly chart. Let's take a look. People think that this is mumbo jumbo. It's not. Look at this now. Monthly chart of the yield curve, almost a reversal bar. But last week, we almost uninverted. Tell me the Federal Reserve didn't come in here and do some yield curve control. So, I look at this and I look at the charts and I say to myself, what are you going to do? You're going to ignore what you've been preaching? If you're not steepening anymore and you're beginning to pull back, and the train is leaving the station to the long side, well, then maybe you need to lighten up on the shorts and add to your longs until such time as conditions become right for us to reshort the market and make long profits real. So that's the yield curve. Right now, it's saying risk on. Green light, buy equities. CRB commodity index. I don't know. I think this is a bad thing. This is really, really bad. I mean, how do I put this? The U.S. debt levels are a fire. And our economy is the house. Therefore, the house is on fire. The fire department's coming. The Federal Reserve. And what they're going to do is they're going to make money cheaper. What does that do? Creates more inflation, weakens the dollar. And they're going to do it when you have the CRB commodity index breaking out of a massive saucer with handle pattern. So commodities are going like this now, yet the Federal Reserve is coming, the fireman is coming, and rather than throwing water on the fire, they're throwing gasoline. It's really unconscionable. It's really unconscionable. So this is for real. We have broken out on the CRB commodity index. Let's take a look at a monthly view. Look at this. Let's take our crayon out and do as good technicians should do. Draw our lines. Because, man, when this goes going, I mean, let's extrapolate out where we could probably go here. That's our upper band of resistance on the CRB commodity index. And when did this take off last? When the Federal Reserve was just printing money hand over fist. What's it doing now? They're getting ready for the Federal Reserve to begin printing money hand over fist. Buckle up. Buckle up. Enjoy the so-called low inflation rates that we have right now. Yields are down on the week. They moved up higher today. Let's go to a daily view. A measurable move up higher today. Bitcoin, really weak here. But we're in a consolidation range on Bitcoin. Up on the week, but a little bit of a fade off the highs of the week. Let's go daily view here. We pulled back. Are we going to put in a higher low? Possibly. Quite possibly. Tips. Failed to hold support. We broke out 3 weeks ago. We failed to hold it last week. We're failing to hold it again this week. One trading day left to go. Let's see what happens here. Daily view. And this is tip buyers saying, is the BLS data for real? Is the CPI data for real? Nobody knows. It's certainly not the way they measured inflation back in the 1970s and 80s. It's completely changed. The way they track housing, it's completely changed. The dollar. A nice bounce back off the lows of the week here, but we're still fading on momentum, on Stokes. Rallies tend to fade. So be careful here with the dollar. Daily chart closed up yet again today. We'll keep an eye on that. Yen. So the big story the past couple of weeks has been the carry trade. You know that these guys, as the yen pulls back, they're going to be doing that same trade over again. And then it's going to come unwound once they get a short squeeze on the yen. Right now, they're going to come back and they're going to do a retest, probably of 61.50 on the yen. Let's see if that holds. Daily chart. Big gap down today. Have little doubt this influenced the market. Have little doubt about that. Doji star formation on the day. We still may pull down here, though. Volatility. Now, I want to talk about this a little bit. So, today we tapped the 50-week moving average, as well as the 20-week moving average, from which we broke out and above back here the week of July the 15th, setting the stage for the sell-off that had its capitulation last Monday. Not this Monday, the prior Monday. So at current, we have failed to hold this breakout point. So this is at current with one trading day left to go. This is a breakout point failure, which is bullish for equities. But on a daily view, take a look at this descending wedge formation. This is unsustainable. So why didn't I go covering shorts today? It's because I think that we're going to get either a single day nasty sell-off or a couple of days of back-to-back selling in the S&P 500. And that'll allow for this descending wedge formation to have the pressure relieved off of it, because it's going to happen. Momentum pretty oversold here. And when we go intraday, you take a look at a 4-hour view. Again, a descending wedge formation. We're pretty oversold here on a 4-hour basis. even on a 30-minute view, we already appear to be putting in a higher low on price, higher low on Stokes, higher low on RSI. Do we get a sell-off in the morning? Think about it. Dow Transports up 1.73%. Very thin volume on the week. Daily view. These are critical. Daily view. Oh, look at this price action today. I hadn't seen this. So they gapped the transports up. Now, what CNBC would do, and if you're wondering why I formed the public forum, it's to try to engage people more. Now, CNBC would start off their nightly report by saying the Dow Transports closed up 1.21%, clearly indicative of an economy that's expanding, it's recovering, blah, 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 blah. What they won't tell you is that we were up measurably higher on the day, and we faded off the highs of the day. They'll talk about the percentage change, which is respectable still. The however is they didn't talk about all the overhead supply which came in and sold the transports intraday. 15-minute view. There you have it. Rip. And this is what I expected this morning on the Qs, but it never happened. George Gammon always hammers the 2 and the 10. Oh, the inversion. Yeah. Yeah, I'm part of that school. I've been studying it for years and years. TZ Burton. Wrong ones. Here we go. This affected what's to stop the Fed from trying to yield co-control whenever it hits neutral? It's completely possible. The fact that last week on the VIX, now I expected a sell-off. I've been talking about it for quite a while now. I expected a sell-off, and we got the sell-off. I did not expect. Where's my VIX? Here it is. I did not expect this. I didn't expect it. I don't think the Federal Reserve did either. So could they have come in and done yield curve control to stop this from going up to 85, 90, where it's been before? It's not out of the realm of possibility. Yeah. It's quite possible. So, is it strange that all of a sudden the yield curve is now going from almost uninverted to now inverting again? I don't know. I don't believe in coincidences. But what's the outcome, right? The outcome, if they're going to do yield curve control, that means that it's bullish for stocks, and you can't fight it. You can't fight these guys. But I think what this is indicative of is that they can be surprised. They can be surprised. Dow Jones Industrial Average, very strong week this week. Powerful week. Looks like we're going up higher, up 2.7%. Daily view, shocking, to be honest with you. Shocking. How's volume? Volume's good. Volume was good. S&P 500 weekly view, we have broken out. One trading day left to go. Very thin volume, though. Let's go Daily view. What a breakout. I think they need to fill some gaps across the board here. I mean, how many? This is what, 1, 2, 3, 4, 6 days straight up. Good volume today. Let's see how they close this out on the day. Ooh. Ooh. A little bit stretched. They killed the shorts today. They destroyed the shorts today. ADX above, actually near 50. Pretty extended. Trip Qs, we already talked about them. Now, the Trip Qs blew through the upper band of an ascending wedge formation. Usually this is going to get resolved down. Again, I'm not saying we're going to break through 2 Mondays ago, the lows of 423.45, but we need a higher low. We need a higher low. Very extended on stochastics. How's our ADX here? Not bad. But let's go 30-minute view. Very extended here, 30-minute Stokes. Good volume into the close. Not horrifically overbought on ADX. Small caps. I think we got to revisit them. Not loving momentum. It's fading. It's declining. One trading day left to go, but this weekly chart's looking pretty healthy. Daily view. I don't know. I'm not sold yet. I'm not sold yet. Technology. Beautiful. Up nearly 7.5% on the week. Very thin volume. Really thin volume. Daily view. We got stopped right at the 50-day moving average. Again, this is roughly 6 days straight up. No rest. None. So what am I going to do? I'm going to buy stocks here? I'm going to cover shorts here? I don't think so. Look at this volume. This is horrific. So we're up over 2 3/4% today on the XLK. Yet volume was just barely above yesterday's volume and well below the moving average. Let's go intraday. I'm so curious here about how this looks. 30-minute view. Very extended. However, they closed this with a bullish key reversal bar. It can go higher. That barcode blocked my view on the chart. And then, oh. All right, let me get rid of it. There you go. The indices seem to all gap up on the jobs data release. Yes, it did the same thing last Thursday as well. You know, we're only talking about a few thousand jobs. We're talking about 7,000 jobs, jobless claims less last week. So that was a beat. They spiked the market. Today, a couple of thousand jobs less, jobless claims, which is great. I don't want to see an American lose a job. I'm not in that camp at all. But the reaction by the market, I don't know. It just seems a little bit. This all seems a little bit too short covering rally to me. That's just my vibe. Inflation is going to the moon here. Get ready. Happened in 80 in Poland. Okay. Those are the Valesa days. Semis. Okay, so semis up 9.5% on the week. Wow, what a move. Momentum is still declining, trading down below. Rallies tend to fade. Rallies tend to fade. So be careful here. Volume is going to come in measurably below the moving average. Let's go intraday, or let's go to a daily view, I should say. Daily view, we're still trading well below the 50-day moving average. Look at this. I mean, this is bananas. Look at that ascending wedge formation. But it can go higher. Biotechs, nothing to talk about. Staples, they broke out on the week. Very strong price action. Daily view, look at this gap up today. Wow. Trading above its third standard deviation Bollinger Band. Discretionary names, even they bounce back. Nearly 5% daily view. Let's first check volume. Horrible. Daily view. Daily view. We got to fill a gap. Emerging markets with China up over 5.75%. Ex-China up 2.24%. Energy, weekly chart. Remember, CRB commodity index broken out now. So expect energy to rally. Daily chart. Clearly lagging here. Volume horrific. One of the lesser bullish charts we're looked at tonight. Crude prices. We recaptured a support level this week that we had given up on a weekly chart. So this very, very tight wedge formation is in play. We can break out here, especially with the CRB commodity index breaking out. And as Larry mentioned earlier, the tensions in the Middle East continue to ratchet up. And you also have, again, Western tanks inside of Russia proper. All such very bad stuff. So if somebody's thinking that there are no black swan events out there, you got to look at the geopolitics that are going on. I mean, they're dying for a war with Russia. They're begging for a war with Russia. It's so crazy. Gasoline prices, this is a weekly chart. Gasoline prices came in 8.5%. That's good stuff. Let's go to a daily view. They were up today. Looks like this sell-off is over. They're going to rally. Natural gas was actually down today. What did they fade? Yeah, they faded. Bearish reversal bar on nat gas. All right, let's talk about gold. Weekly view. Gold threatening to take out all-time highs. I think it's happening probably tomorrow, if not next week. Very bullish price action here. Loving gold. Thin volume, though. Daily view. Setting up for a continuation breakout. Bullish. Gold mining stocks. These are the junior miners. We own this. Up 5.92% on the week. Daily view. Good looking chart. They're going up higher. Gold stocks are going higher. Let's do some chart requests, and we will call it a night. Again, folks, doing chart requests as of the 30th of August. I'm going to put that QR code back up for a moment. Need to be posted in the public forum. It's free to sign up. No credit card required. I just want organization in there. There's a lot that we're going to be offering in there. This is just the bare bones minimum of what we're going to be offering. Stock chart requests, small account club, premium content replay, trade idea feedback, development of long-term relationship with traders of like mind, and discounts to our preferred vendors. So again, link below on YouTube, link above on Twitter, and enter your email address. We hate spam too. Let's get to natural gas. Will natural gas rally into September, November? We're still in a massive bear market here. You still have lower highs and lower lows. So the bear market is alive and well. Let's check out seasonality. This goes back 17 years. Next week is a very, very bad week. One of the worst weeks out of the year for UNG, natural gas. But the following week after that is one of the better weeks out of the year. So next week, if they tank natural gas, perhaps it'll be a wise idea. If you're doing the seasonality trade and we hit nice support levels, you got to have nice support levels. I wouldn't just go buying natural gas in the hopes that it rallies the following week, because that's what the seasonality chart says. You want to buy where you have support below. And on UNG, monthly chart, well, we're right there. We bounced right off of it. Let's bring up the weekly chart and overlay monthly. Yeah. This is the value of TrendSpider, folks. Really powerful charting software. 35% discount code below. As a matter of fact, I'll throw up the QR code. The new one is for TrendSpider. 35% discount code at the bare minimum. Use the link. It'll take you over there, and you may even get a better discount than my standard 35%. That's the bare minimum that you'll get. So we've gapped up this week. I think that we need a nasty retest next week to take us back down or close to monthly support at around $13 a share, give or take a dime. And then going back to seasonality, if you're buying the dip, the retest next week, the following week could prove to be pretty profitable. Now, on a monthly time frame, a longer term view, we're not going into a seasonally favorable period of time. We generally trend down in terms of price action, but we're at monthly support, so that short-term seasonality trade is an option. But longer term, be aware of the environment that you're going into, seasonally weak period of time. That ends in February when you get a trend up higher. Semi-sector. Let's play a game here. Now, they have yet to test their 50-day moving average, but they too, as the Qs did, they have broken through monthly resistance like a hot knife through butter. Dash line is monthly resistance. Solid line is weekly resistance. Daily chart, just a straight shot higher. I think we need a pullback. Seasonality for the semis, September is not a good one. Weekly chart. the next 2 weeks become favorable. But as soon as we get into early September, it becomes an issue for the semi names. That's true for the entire market. So semis, I can't buy them here. We don't have a higher low. I can't do it yet. We need a pullback. We need a higher low. Then we get our pivot point, and then we can buy the breakout. Not there yet. Which chart was that you were just looking up with gold? GDXJ, the gold mining stock, ETF. Let's get the QR codes off. It's blocking people. I'm looking forward to that stream. Yeah, me too, TZ. It's going to be fun. It's going to be fun. Related to your comment on no coincidence, what are your thoughts on price reaction leading to and after CPI record dates for future months? It depends. It depends upon expectations, and it depends upon do we get revisions for prior periods? If we don't get revisions, like today, we got I think we got a revision. Let me see here. What this administration does is that they report beats, and then what they do is they go back the following reporting period and they revise down the prior period. They do that usually with non-farm payrolls. I'm trying to find, there was a revision to today's report. Oh. No, it doesn't look like there was a major one for last week. Maybe it's a different report I'm thinking about. So claims as of August the 15th, reported initial jobs claims for the week ending August 10th fell to 227,000, which was a decrease from the previous week's revised level of 200. Yeah, they did revise it. They did revise it. Yeah. So this but it was revised lower. 240,000 reported last week. Yeah, so it doesn't look like there was if anything, it was a positive revision. So back to your question, because I'm getting long-winded here. If there's anything that impacts the probability of the Federal Reserve continuing to cut rates, it's going to adversely impact the market. So it's not just a CPI report thing. Let's do a hypothetical. If jobless claims come out far better than expected, guess what that means for an October rate cut? Automatically, is there going to be a rate cut? Because maybe the economy's too hot. So it's not just a CPI, it's not just a PPI. There are several economic data points that are out there, including PCE, that can influence whether or not there's going to be a continuation of the Federal Reserve cutting rates. So by no stretch of the imagination is a foregone conclusion that they're going to definitely keep cutting, but September's in the books. They're going to go. You were talking about the junior miners. Yes, and also the senior miners. Both the same, very bullish. Oh, T and VZ. Okay. So let's do it. AT&T flirting with resistance. I wouldn't buy this. VZ, I wouldn't buy it either. Here's what I would do. Always go, when in doubt, always go best of breed. Verizon's number 5 in the group. It's still under distribution. Relative strength 70, while the group strength is rated A. So Verizon's a laggard. It's a laggard. It has no EPS growth. ROE is good. Very good. Dividend yield 6.6. T is number 3 on the list. Under accumulation, same growth strength. EPS growth still terrible. Slightly less divvy, less ROE. I would go with T. Here's the why. And I would not buy either of these right now. Here's the why. Monthly chart. Look at all of this congestion. You have monthly resistance. You have quarterly resistance. However, it's in the rear view mirror. We've already broken out above it. We can backtrack. We can retest, all that good stuff. But it's beginning to break, or I shouldn't say beginning. It has broken out. What we're lacking here is a higher high. And in fact, we're honestly lacking a higher low. You could argue that this is a higher low. Here. You know, we do have a higher high. I prefer T, whereas Verizon hasn't broken out yet. It's lagging. And it's not under accumulation. Therefore, T is the winner of the event. Leaving it off with Dell, and I'm logging off. All these need to be in the forum. So please, again, use that link below. Again, launching the 30th. So I don't have to go hunting around for these. Dell. It's rallied off the lows of the month, but so is everything else. We're right at weekly resistance, right at daily resistance. It could break out, but again, folks, I'm a big believer in looking for higher lows. This is a straight shot higher. Until we pull back and do a retest of some support levels, I'm not buying a damn thing. So pull back, retest, pull back, retest. With that, folks, have an awesome night. I'll talk to you tomorrow.